Hey folks, Dan Freer here, the rate update. Today is October 19th, 2020. What happened with rates today? Well, stay tuned. In about 30 seconds, I'll let you know. So what happened today? Well, some great numbers came in the housing front. I'll go over that with you in a minute. And some other news in regards to employment. We got good news there as well. And the stock market was down pretty big this morning, but ended up, I think the day it was up positive. So let's go over some numbers here because you come to my channel to see where mortgage rates are. So let's get to it. All right, so I post this every day, or I try to do this every day if I have this information before I do my videos. So what this number, or what this chart tells us or is giving us, is what's going on with rates. So you can see back in November of 2019, here's where rates were. And this is for 30-year conforming, the 30-year jumbo, FHA, and VA, all the 30-year rates. Okay, the bottom one down here is VA. So let's exclude that out for now. Everything else was in the high threes, and it teetered in the above 4 back around this time last year. Okay, ever since then, look at this, a phenomenal chart. So now we see over here, what these numbers are giving us is what the, I'll say the blend throughout the whole country, what the average rate is throughout the whole country. Now there's a lot of bits and pieces to what goes into a mortgage rate. One of the biggest things that is the determinant of where mortgage rates are mortgage-backed securities. And that's why people come to my channel, is to find out what those are doing, plus a lot of other economic indicators. And I'm gonna get to that in a second. But for right now, I'm gonna go through some numbers on where the averages are throughout the country. I'm gonna go over what's happening today, and then at the end of the video, we're gonna go over where my rates are today. So, but what this tells us though is today on a 30-year conforming loan, the rate is 2.82%. There's a 1-day delta, which is down 1 basis points, and a 7-day delta, which is down 8 basis points. What is a delta? Well, a delta is the differential. So between a 1-day differential is the rate went down 1 basis point. What a basis point is 1/100th of a percentage. Now let's not complicate this too much. 2.82. The 0.8 represents the 10th, the 8 is the 10th, and the 2 is a 100th. Okay, so go back to your algebra days. So 1 basis point means this rate yesterday was 2.83, and it dropped 1 basis points, so 1/100th. So we're down now to 2.82. So not a big change at all. It's virtually irrelevant. So I just want to explain what the basis points mean. However, when we get over here, you're going to see 104 basis points, 101 basis points. Okay, so what this means is rates are 1.01 lower today than they were a year ago on FHA. So if you have an FHA loan that you took out a year ago or more, I highly suggest you get a hold of us, because you should be able to drop your rate at least 1%. Same thing with VA. Jumbo, you're 74 basis points off, so almost 0.75% lower, and conventional is 0.85. So you can figure out the math from there. So that's what's going on nationally with rates all over the country. Now, what happened today? This is why people come to my show, or they used to tune into my radio show. I had a radio show in Chicago every night and 2 different channels and on weekends. And people would come and to see, Dan, what's rates doing today? What are you seeing them doing the next couple days, weeks, months, and years? And I have a lot of followers that do that. And it's realtors, financial planners, home buyers, home sellers, mortgage people. A lot of people in the mortgage business follow my channel as well. So we follow this number here. And what this number here is the price of what's happened today with mortgage-backed securities. And a mortgage-backed security is basically a bond that is condensed with hundreds, if not thousands, of mortgages that's sold on Wall Street as an investment. Okay, that's in its simplest form. So what happened today with that, the price of that bond went up 19 ticks, or 19 basis points. Okay, so how and why would that affect us? Well, when the price goes up, you pay more for a bond. That means the yield on that bond just dropped because you paid more for that bond. When the yield drops, the mortgage rate drops. So let me explain this to you just in its simplest terms. How the bond works is next year this bond is worth $100, okay? But today I give you $50. Next year you give me my $100 back. That's what I invested in. So I give you $50 today and next week it's worth $100. I doubled my money, or I had 100% return. So the rate on that would be 100%. That's nuts. You'd never take a mortgage with 100% interest rate, but that's how it works. Let's back that back a little bit. Let's say I give you $100. I paid more for that bond. I give you $100 today, and next year you give me $100 back. That's what my coupon, or that's what my bond is worth at maturity. Well, I gave you $100 and I get $100 back. What's my rate of return? 0. Well, that'd be phenomenal if I could have a 0% interest rate. But I just want to explain to you guys how the more you pay for a bond, the lower the yield of that bond. So that's what's going on with mortgage-backed security prices. Okay? So again, let's recap this. As the price goes up, that's awesome because rates are coming down. So last week we saw the rates come back down. So what this is, let me first, before I start talking down here, let me explain to you what this is. This is what's happened to the price of the mortgage-backed security bond over the last quarter. Well, this looks pretty much blah. There's nothing going on. Well, kudos to the Fed because of that. Because if we go back further, look at this catastrophe. And again, as prices drop, rates go up. So back in March, when the pandemic started, we had, within about a week or two, mortgage rates spiked out of control. And a lot of mortgage companies faced a lot of backlash because of what came out at that time was forbearances. And we'll talk about forbearances at another time. I think I might even come out tomorrow with more details about the forbearances and how those guidelines keep changing on almost a daily basis. Okay, so, but let's get back to this. I'm going to go back to the last quarter. So the Federal Reserve, what they've been doing is they've been pumping a bunch of money into the mortgage-backed securities market to keep it stable. They're like, and we all love stability. You know, you like your job. Not a lot of people like change in their life, and nor does the markets. So the Fed's been stepping in and buying mortgage-backed securities when and as much as needed to keep the stability. Okay? So rates should be right in here, and they've been doing a great job. They will deviate up a little bit, out of compliance a little bit, but they're ultimately going to trade right in this range here. Why is that? It's like, Dan, why are you picking right in here? Well, if you look at it, that's basically where if you split it in half, that's where we are. Also, what this tells me is we watch moving averages. So over the last 100 days, 50 days, and 25 days, we see moving averages, and those are represented in lines right here. This is the 100-day. The black line is the 50-day, and the brown line is the 25-day. We can see right here, it's not a fluke, but the 50-day and the 25-day cross, and they've been sitting right there. If you watch this, they're really tight, and that's what we want. That is fantastic. We like the stability in the market. So right now, in a technical term, rates are a little bit lower than what they should be technically, and it being charts, but a lot of banks haven't really done much to their rates. So when the MBSs are here and or they're up here, basically the rates throughout the country are staying stable. Okay, and that's what we like. So what happened today in the market? Well, the Dow closed at up 44 points. It was down a decent amount at one point. Some great news that came out is saying that housing sales are blowing the roof off. And there would be even more sales if there was more inventory. So we're basically facing a lack of inventory. Another some good components of this is the median home price now is $313,000. That's up 15.5% over a year ago. So that is another phenomenal factor. Then we start getting to employment numbers and jobless claims. Those have been staying very steady, and actually the numbers have been improving week after week after week. So that's even more good news in the markets. What's on the calendar? Well, today we saw the manufacturing survey, and that was really good. It was better than consensus. Initial jobless claims were higher. Continued jobless claims actually dropped. That's where we got a little bit of a good news in the market. And existing home sales, they blew the doors off. So I'll leave it at that. Tomorrow, there's really nothing out that should affect the markets. What's the headline in the newsletters going to read today? Let's refresh this and see if we got any refreshing news. Average loan taking almost 2 months to close. So if you're frustrated with me, guys, there's a reason for that. We have among the best rates in the country, and I show you those numbers live normally on Tuesdays. So it's not me that's holding up your loan. The average turn time on a loan is, as you see on here, is 2 months. We continue to keep our rates the lowest in the industry because we don't want to slow down volume. We'd rather work longer hours and weekends to help you guys out in the long run. So that's what we're doing on our end. So the next thing I want to do is go over, what did my rates do for today? So let's get into that. We went over just a minute ago what the national averages are for rates, and now I want to show you where I am. Okay, so I used to do a very detailed, and it was a lengthy video going all scenarios on different kind of programs and packages and credit scores and loan to values and property types and all that to show you or teach you how there's so many different components that go into your mortgage rate. But that kind of got a little bit too in-depth and too long. So I wanted to really condense it. So in this video, or this portion right here, I go over what are my rates. In the background or backdraft of all this is it's a $250,000 loan. It's a single family home, and it's somebody's primary residency. Okay. Now you might think, well, that's the normal loan. Well, yeah, but this is a 740 credit score at 80%, what we call loan to value. But rates are different at 740, 720, 700, 680, 620, 600. As your credit score goes down, this rate's going to go up. Okay? The different kind of property also affects what your rate is. So there's single family homes, which have the best rates. Then there's condos. Then there's 2-unit buildings, 3-unit buildings, 4-unit buildings. As you progress up that chain, the rate gets higher. Okay? This is loan to value. What loan to value is the loan divided by the value of the property. So if you have a $100,000 loan on a $200,000 property value, you're at 50%. So when I'm breaking this down, again, what I'm using is this credit score at this loan to value, $250,000 loan on a single family home that's primary occupancy. Okay? So this is my conventional rate on if you're looking to purchase or do what we call a rate and term. What rate and term is, you're just taking your current balance and you're refinancing it to a different term, different rate, different something. Okay? Cash out means you're refinancing your current balance plus pulling out money. So you're like, Dan, I owe $200,000, but I want to finish my basement and put in a jacuzzi. Well, I need $50,000. So now my loan amount's $250,000, but that's cash out because we're pulling out that $50,000 in cash. So you'll see that changes the rate. So up here is if you're looking to purchase or rate and term on a 30-year fixed, 740 credit score plus at 80% loan to value, my rate is 2.75. Okay? At the cash out, my rate's 2.875. So that is that. And again, there's a whole bunch of variations, so you're probably going to have a different scenario than this. So that's why we need you to call us, reach out to us via email, do something so we can actually give you a specific rate quote. But what I try to do in this is saying, I need all the data that I can get, so when I'm quoting your rate, I'm accurate. So I need to know, How much is your house worth? What loan amount do we need? Are you looking to pull out cash? What's your credit score? What kind of property is it? Is it a single family home or a 4-unit building? All those matter. What term do you want? Do you want a 30-year, a 20-year, a 15-year? I can do a 28-year. If you're like, Dan, I've been in the loan for 2 years. I really don't want to go backwards. So can you do a 28-year term? I can. So let's get on to the rest of this. So the next section I have is, and again, I have 25 years, 20-year, 15-year, 10-year, adjustable rates, all kind of stuff. But I'm trying to make it simple for you, just to throw out some generic rates for you, like we just went over on the beginning of the video. I went over the national averages. Okay, so now on a 15-year, when we got a purchase rate and term, the rate's 2.25 with the same criteria because it's a shorter term. Look, 2.25 here, 2.75 here. So the rate is 0.5% lower on a 15-year than it in this particular, with these characteristics, than a 30-year. The cash out, same characteristics as above, is 2.5. Okay, so the next part of this equation is my government programs. And you remember when we did that analysis over here, focus your attention back on here. This goes through the 30-year conforming, FHA, VA, and jumbo. Okay, so again, this is 2.82. Remember, mine was 2.75, so I beat that. Now we're going to go with FHA and VA. So let's go back to where my rates are. Now on my government programs, if you're looking to purchase or refinance, there's FHA, VA, and USDA. Okay, I'm going to break down who would qualify for these and why. Okay, well, if we're going to go from the bottom up, if you're in a rural area, you could possibly qualify for a USDA program. There's different home restrictions for your address, different income restrictions, and so forth. We'd love to help you. All I need you to do is reach out. We need your address. And then we're going to have to go over your income to make you, because your address has to qualify and your income has to meet certain criteria. So that is when you would qualify for a USDA loan. You can go up to a 100% financing. Okay? VA, those are for veterans. You can purchase a home or refinance up to 100% loan to value. Now, FHA, this is if you don't qualify for either one of these and you might have a lower credit score or just something in there that it would be better for us to take you with a VA or a FHA loan than with a conventional loan. And those, if you're looking to purchase a house, only require 3.5% of a down payment. So we will finance 96.5% of the home's value or the purchase price. So let's break this down. Again, it's a 740 credit score. I use those throughout here. 96.5 loan to value on the FHA and 100 each here. The rates all across the board are 2.5, APR 3.024. So those are my government programs. Again, as the credit score goes down, the rate's going to go up because it's higher risk. Okay, with all these categories. But in these categories, the government guaranteed loans, the rate differentials aren't as extremes as they are in conventional financing. Now, where we're known for, or what we're known for, is our jumbo fixed rates. Jumbo fixed rates. Today, we can do a 740 plus credit score, 75% loan to value. Our rate is 3% on a 30-year fixed rate. 30-year fixed, no points, no teaser, no ARM, no adjustments. It is 30-year fixed, 3%. So those are my rates for today. Okay, so now you're asking, now what? Well, I hope you take all this in and you realize, rates are low today. And you keep getting bombarded, rates are low, refinance. But most of the time you're like, what is it doing for me? I could care less what the average rate out there is 2.875. Who cares? What does that mean for me in numbers? What benefit is it? I've been in my house for 8 years. Why would I refinance now? Well, let's say you could do this. Let's say we refinanced your loan. We could keep your payment the same. You've been in there for 8 years, so that means you have 22 years left. Well, let's say we can keep your payment the same and reduce your term to 15 years. It would save you 7 years of payments. Let's say your payment each month, your principal and interest piece is $1,000. Well, we save 7 years, so that's 84 payments of $1,000 a month. That's $84,000 I could save. And my payment stays the same. That's why you might want to look at refinancing. Or you have a ton of credit cards. You got through this pandemic and you're like, we made it. We're back to work. We're not furloughed anymore. We were able to keep up with all of our mortgage payments and car payments, but our credit cards are out of whack. Well, why don't you look at maybe possibly paying off those 20% interest rate credit cards with a 2.875 or 3% mortgage? Condense it all in. I don't want you to stretch out that credit card payment for 30 years. Let's get everything established. Let's get everything condensed into one payment, help you save each month, put a little bit of savings in the bank, and then once that's there, in most cases when we're refinancing and doing debt consolidation, we're saving people probably from $500 to $1,000 a month. Let's say we do that and we refinance you and then you stay there and say, okay, I freed up $1,000 a month. Let's say you just make that mortgage payment that we refinanced you in, and you took that extra money each month that you weren't paying out and you started just saving it. Or you stop using your credit cards. And then after a year or two, you're like, man, I got some savings in the bank. Now I can start prepaying on my mortgage and maybe start sending in an extra $100, $200 a month and drive down that term, the remaining term of your loan. That's our goal. It isn't to put you in any more debt. I'm not going to put you in any more debt. You put yourself into your own, you have the debt on your own. I'm just helping you structure that debt. So hope you find value in these videos. If you do, all I ask, give me a thumbs up, subscribe down below, hit the bell, so every time I do post a video, you see it. Let me know what you want me to talk about. I'm going to start some tutorials next week in regards to credit, financial planning, and some other stuff, but I'd like to have your comments down below on where we might be able to help and dig in a little more details for you. So how do you get a hold of us? Well, the best way to do it is go to therateupdate.com. All right. Over here, if you want to apply, you're like, Dan, I want to get the ball rolling. I've been watching your videos for a year, 2, 3 years. I'm one of your subscribers. I love this stuff. Now I need your help. How do you do that? Well, you can click the Apply Now button. You can hit the refinance rate checker or get a free quote. Or you're looking to buy a house, hit here. It'll spoon feed you right through the process, give us all the information we need to get you pre-approved fast. If you're like, I want to call somebody, how do you get a hold of us via the phone? Well, down at the bottom, we have an 800 number, 844-775-LOAN. Also, what I ask a lot of people to do is this. You're in the process right now. You built a home, you're buying a home, you're looking to refinance, and you got pre-approved or you got a quote from somebody, and you start the ball rolling. A lot of questions I get or a lot of things I tell people is, send me that information that you got pre-approved or you've got the mortgage process started. That company has to send you what's called a loan estimate. Okay, send that to me to get a second opinion. Probably 95% of the time, I can get you a lower rate and lower fees. Lower rate and lower fees. Probably 90% of the time. 95% or plus, I'm getting you either a lower rate or lower fees. And that's what's normally happening here. How do you do that? How do you get this information to me? Well, the best way to do it is shoot me an email. Send that documentation to me. My email address is D for Dan. So dfrio, which is F-R-I-O, at preferredrate.com. That's the best way to get us. So other than that, that's all I got for today. So God bless, take care, be safe, be happy. I'll see you tomorrow. Bye-bye.